Welcome. I'm Jim Farish, editor and founder of SectorExchange.com and the ETFExchange.com. For this next couple of hours we're going to spend together, I've titled this Making Money with the ETFExchange.com Regardless of Market Direction. We've been teaching a course publicly for several years now called Making Money Regardless of Market Direction on being long or short the market. So what I'm going to do is look at how we look at the market with ETFs to keep it simple. If we have time, we can drill into the stocks, but we'll see how this pans out as we go through the educational component of this. The focus of this really is for me to kind of help you understand two things. One is what we do or what I do as an investor, and two is to help you get a better handle on what you do as an investor so that you can accomplish your financial goals. And I think that's really the crux of the matter. I've spent the last almost 28 years educating people about how to manage money, both on a professional level as an advisor and both as on a website type format and in one-on-one, just sitting down with investors and saying, here's what you need to do and here's how you need to focus your money management. And I taught a course at Florida State University, to give you a little bit of background, back starting in 1985, and how we taught this class was through the adult ed curriculum, and what our focus was how you, the investor, could take control of your money, and how you, the investor, have to deal with two different issues. One is logic and two is emotion. And we used to teach a class called Money Psychology 101 and how to do that across the broad spectrum of investing. We have some classes that we've taught live that we've recorded that are on our website, SectorExchange.com. That if you'd like to listen to those, you can drop us an email. Just send it to info@SectorExchange.com. And we will just request for the link to get to those materials, and we'll make them available to you. But I like for people to know I've been teaching this stuff for a very long time. The funny part for me is that it never really gets old, because no matter how much the markets change or products change or what we put our money into changes, one dynamic remains the same, and that's you and I as investors, and we are the hardest part to deal with on a day-to-day basis, and that's why we really did develop the ETFExchange.com. That's why we developed SectorExchange.com. If you go to the ETFExchange.com, you got to put THE in front of it. But our focus on this website has always been, how do you manage money with ETFs? And we'll talk a little bit about how we break this down. SectorExchange.com was the first website that we launched back in 2000. Great year to launch something. But we launched this on the premise of breaking the market into sectors, and that's what I'm going to talk about as we go through how do we make money. We got to break the market down. We got to do a lot of the right things. So let's start off on the right foot. And first and foremost, before you put your money at risk, one, determine your risk tolerance, not mine, not your neighbors, not somebody on the website, not somebody's seminar that you've gone to, but yours. You're the one that has to determine how much risk are you willing to take as an investor, and that, to me, is the ultimate priority that you have as an investor. And if we look at, this is the home page for the SectorExchange.com website, and if you go to the home page, you can actually go in here, that you can see all the videos, all the educational material that we post out here on our website every day. We try to update and get things out to you in a format that will help you be a better investor, and that's what this is all about. The focus is for you to be a better investor, so you can go here to the website and you can go to the home page right here and flip through this, and part of this is for you to fill out a risk profile. There's one available on the website for you, which I put right here. Download the risk profile from Sector Exchange, and you can fill it out. It's about 8 pages. Not all of it are you going to want to fill out, maybe, but at least the risk component, there's about 3 or 4 pages of questions that help you define how much risk are you willing to take as an investor. Now, I like to spend time on this because what I want people to understand is this, and I'm going to use a chart here so that we can look at this from a perspective of what I mean by this, and this is the NASDAQ index, and you can see if we scroll this back over time, and if we were to look at the downside of the market, that's risk to some people. The upside of the market to some people is reward. And what happens in between is volatility. So let's flip back to a weekly chart, and this is just the NASDAQ. You can see going back all the way to 2004. And what happens is we get volatility in the market. So in other words, the market does not go up or down in a straight line. The market goes up or down based on what you're trying to do as an investor. So if we were to draw a trend line across right here, that doesn't go straight up. You can see it has volatility. Matter of fact, if we draw two trend lines, you would see that we could capture that up or down movement within a range. That is volatility. And what people confuse is volatility with risk. Risk is what is the potential loss in a portfolio, and that is something we'll define as we go along throughout this course. How do you define risk relative to volatility? And more importantly, how do you protect the asset that you have from undue risk, if you will? In other words, how do we capture and do what we want with our money based on the risk that we can tolerate on a day-to-day basis, week to week, month to month, year to year, with our portfolio? And that's really what it comes down to. Determine how you'll invest or diversify your money. I think that's very important. Do you want to use ETFs? Do you want to invest by sectors? Do you want to use mutual funds, stocks, bonds? You know, there's a myriad of investment tools out here, real estate. We could go through list after list of different things that you can invest in, but how do you want to do this, and how do you want to capture and control that money? And I will tell you, we'll go through this as we go through the class, that I will always come back to keep it simple. The KISS principle, keep it so simple you can do it. If it's not simple enough for you to implement, it's not going to work. And that, to me, is the key factor, bar none, when you're investing your money, is keep it simple enough to do. And then thirdly, determine the time frame that you're investing in. In other words, how long do you want to be invested? Do you want to be a day trader? Do you want to be a short-term trader, swing trader? Do you want to be somebody who trades intermediate-term time frames, which to me is 9 to 18 months? Do you want to be somebody who's a long-term investor, which to me is 36-plus months out? How do you want to invest your money? There are thousands and thousands, literally, of ways to invest your money. You can use options. You can buy currency futures. There's so many things you could do that we get so confused trying to capture them all. I say focus, narrow down the field, keep it simple, and learn how to invest your money first and foremost. So I think that's a key for me in starting this program with you, is start off on the right foot. Put your money, before you put your money at risk, know what your risk tolerance is, know how to diversify, know what time frame you're looking at, and then also understand that these are different for everyone. You have a trading personality. Mine, most people, because I've done this for so long, think that I'm a high-risk investor. Actually, I'm very conservative by nature, and I don't like to risk my principal. Why? Because I work too hard to get it. Like most of you, I've had to work day by day, week after week, month after month, year after year to accumulate wealth. The last thing I want to do is lose it. And so I'm more focused on how do I accumulate my wealth, preserve my wealth, but also grow my wealth in a format that meets my personality. Everybody's different, and that's a key. When I sit down with investors one-on-one on a professional basis as an advisor, I spend a lot of time trying to decipher trading personalities, because I don't want to manage money relative to a bucket, so to speak. And I call this bucket money management. Unfortunately, Wall Street has gotten very good at it. Mutual funds are a bucket. That's where everybody puts it in. One person or a team of people manage this money based on their goals and objectives for the fund, and you get the end result. So we're going to stop right there for a second, give you a breather, take a deep breath, and then we'll continue from here.